Whether you are new to trading or if you've been around for a while, doesn't it just baffle you how some people manage to get involved at the very start of a trend at exactly the right moment so they can maximize the position in the market, whereas you, on the other hand, struggle to find where those exact points are, so we're not capitalizing and taking the most out of the market. Now, if that sounds like you, make sure that you stick around until the end of the video, because we're going to look at things from a little bit of a different perspective to some of the other videos which you'll find here on YouTube. I'm going to be dropping some absolute truth bombs and golden nuggets into this presentation to help you ride those trends from the very start until the end. And if at any point throughout this video you think that it's providing good value, don't forget to smash that like button and subscribe to the channel, because there's going to be plenty more videos like this on the way. Thanks very much. See you inside. So let's jump into the presentation part of the how to identify a trend reversal, and also how to trade them. This part will be quite quick, and then we'll jump into the actual charts to show you the demonstration. But first of all, we're going to go through what is a trend, how to identify a trend using the ABCD or the 1, 2, 3, 4, or the high, low, higher, high, higher, low. Then we're also going to learn how to identify a reversal, and we're also going to find out really briefly how to ride the trend. Okay, so without further ado, what is a trend? Now, if we go to places like YouTube and we go to the Explore, we should be able to see what is trending. Now, by something trending, it means what is gaining popularity or what is losing popularity. It's literally just showing what is going up in the charts and what is going down in the charts. So a trend, anywhere else, the standard definition of a trend is, according to Google, a general direction in which something is developing or changing. For example, an upward trend in sales and profit margins. Okay, so according to Google, it's just when something is going up or down. Very, very simple. Now, how do we apply that to Forex? Okay, so how do we identify a trend which is bullish, for example? Now, on a very, very simple scale, a trend will look something like this. Okay, where price is moving up quite clearly. So you've got all these different points. You've got a starting point, and then you've got what is classed as a high, and then you've got a lower high, and then a higher high. Now, with these 4 points, these are sometimes called, according to other YouTubers, 1, 2, 3, 4, or A, B, C, D. Well, it doesn't matter really what you want to call them, because these 2 or 3 aren't actually confirmed until the 4th one goes into place. Okay, so I'm going to explain that a little bit clearer for you. What you start off with is a starting point. Okay, so just a starting point, nothing really happens at this. Now we get a move up. That would generally mean that we're trending up or we're moving up. Then what you have is a bit of a counter move. Okay, so you got a bit of a move downwards. Now, as long as this area doesn't break, okay, you just got to imagine a line along here. As long as this area doesn't break, we're still in an overall upwards move, because what we've got is generally a low and we've got a high. So this becomes our high. Okay, so we're just going to label that low and then call that high. And then once this move starts coming upwards, as soon as it breaks this area here, okay, I'm just going to draw some dots. As soon as it breaks and breaches that area there, what we get is a confirmation of this 3rd one, which becomes the higher low. So that becomes a HL. And this now becomes the higher high. It only takes 4 moves necessarily to generate a trend, because when you look at a trend going like this, where's the best place to be getting involved in a trend? Yeah, we'll come on to this in a second, but just bear that in mind. That's a question that I'm going to ask you in a minute. Where is it best to get involved in a trend? Is it over here, here, here? Think of that for a minute. Okay, so we've got this in mind. We've got the low, we've got the high, higher low, and a higher high. What is also known as the A, B, C, D. just to make it really easy. Or some people like to do that to try and sound intelligent. Then we've also got a 1, 2, 3, 4. Again, it's just pointing out the first point, the second point, the third point, and the fourth point. So identifying a bullish trend, to summarize that, is we've got our starting point coming up, we've got a bit of a counter trend move, and then we get a break of that second move, okay? And there is the indication of your trend starting, okay? That's the start of your trend. All right, so let's jump into how to identify a bearish trend. Now it's exactly the same, but it's in reverse. Okay, so we've got our starting point up here, starting point, we work our way down. So that means that price is falling, it's moving down, but we don't know where the end of this point is until we start getting a counter trend. Now it doesn't matter how far this goes as long as it doesn't breach this area up here. Okay, so let's say that this is a deep counter trend, and then we get a move down, and we get a break of this level. Okay, so what this has done is this has made it our starting point, which we're going to call in this instance our high, or our 1, or our A. Yeah, and then we're going to have this move, which is our low, or our 2, or our B. Don't want to confuse you guys, it's actually a high and a low. These other things are just marketing terms. Then this one only gets confirmed as a counter trend move once the low has been broken. So these two get confirmed simultaneously, all right? So this now becomes our lower high, so LH, or our 3, or our C, and this one gets confirmed as our lower low, which is also our 4 or our D. Now again, a trend always looks better. You always feel more confident getting into a trend when you see it going something like this, because a lot of people will notice the trend and they'll say, okay, cool, now I can start looking to get involved. Big mistake. Well, not a huge mistake, but a mistake which costs people money on a daily basis. Now, the guys who know what they're doing, they know how to follow a trend on a really quick basis. This trend is identified here. Okay, so again, bear in mind where it's going to be best to get involved in a trend. Okay, is it best to get involved there, 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 there? No. So let's move on to our next part, how to identify a trend reversal. So we're going to work our way down. Then I'll change the color over to blue. Okay, let's see if we can simplify things with this. So we've got our high up here, then our low, then our lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now at this stage, imagine that you can't see this blue part. At this stage, it just looks like an extremely strong downward trend. It looks fantastic. Then we get the counter trend, which we're expecting because we always get that. So we're looking to make a lower high again. But what happens? We get this move. It doesn't break this low. Then what happens is we get a break of this one here. Again, no problem because we haven't broken this area. Now this one is key. Okay, so this is essential when we're looking at a reversal of a trend. Okay, so again, price has come up and then it's come back down and it's created yet again. It could be a higher low, it could be even lower than this one, so it could theoretically move down a little bit lower, but because it hasn't broken this level and it hasn't broken this level yet, we're actually currently just in a range. Okay, so ranges, you know, there's ways to trade them, and I'll show you how to do that as well at some point. But currently, we haven't reversed, we're just stuck in a range. It's only when price comes up through here and we get a break of this level, even though we'd worked our way down before, the move which took us to this low, so this significant low, the move which took us there was this one. We need to break this one to confirm that there may well be a trend reversal. Okay, so all of this stuff going on down here, just going like that, doesn't matter. It's once we get the break of here. Now price comes up and it creates a new high. Okay, so this is no longer the high, this is the high. And the low, we could class it as that, but pretty soon, if we get a counter trend move, which would be this one, and then a move back up to break this level, we now class this one as the low, no longer this one. Now this is where I differ from a lot of the other YouTube videos which you'll find, because a lot of people will say this is the low. But when do you give up on this low? You know, we could go into a range for days or weeks and then break up, okay, and move upwards, get our counter trend move and carry on upwards. Do we still call this a low, even if it was 3 months in the past? No, we don't. It becomes almost irrelevant. It becomes the one which is nearest to the push up, okay? This is the key difference, and this is what has made me so much more money in recent months than ever before, because I've paid attention to only what is immediately to my left, not miles to the left. That's old news. No one cares about that. It's this stuff now. So this becomes the low, then we get the high, and then we get the higher low, because we're now doing the reverse. We're going back up on a bullish trend. Then once we get the break of this, perfect. It's game time. We're in. This becomes the higher high. So what we can do from here, only once this has been confirmed, so this one's been confirmed, that one's been confirmed, and that one's been confirmed, we can now look at getting involved in the trend moving upwards. Okay, so where I said before, where we were going on about where is best to get involved in a trend, is it all the way up here? Is it here? Is it there? Is it there? Is it down here? Well, actually it's not down here and it's not here, okay? And the reason why I say that it's not this one here, even though we had this break of the move here, is that we need the confirmation of this break to confirm our 1, 2, 3, 4 move. I hate using that phrase, but there it is. 1, 2, 3, 4. Now we can say that we're in an upward trend. On any part of this pullback, this next pullback, which is here, over to here, we can look for a bullish move. So I would look for a bullish candle like that, basically, and fill that in. That's what I'd be looking for. Hopefully I would get it somewhere around there, and I could get involved and ride this trend all the way up. Superb. Now, how to ride a trend. This has been such a game changer in my style of trading. Let's go with an upward trend. So let's go with a bullish trend, all right? What I do is, once the trend has been identified, so we're going to have our low, our high, our higher low, our higher high. We know that the next counter trend down, and it is scary, like, you know, there's ways which we can identify this further, which we haven't gone through yet, but we need to get involved on the counter trend move. So when price is dropping is the best time to buy. Okay, I know it sounds a little bit strange because people only want to buy it when they see price going up, and generally speaking, yes, you do, but you need to buy at a discount. So all of these pullbacks here, here, you know, another pullback up here, these are discounted rates, because you don't want to be buying up here and then up here, because these are the best chance for price to start reversing. So as soon as you enter the trade, you're straight in the red. You don't want that to happen. The best place to get involved in the trend is on the first pullback, which is available. And as I mentioned before, I'd be looking for a candle which is, you know, somewhere along the lines of this, with a, like, maybe with a short red candle next to it, to show that price is now starting to reverse, or, you know, indicating that will reverse. But I tend to ride my trends by, let's say for example, you put your stop loss down here, your order starts there, so you buy there, stop loss. I don't set a take profit, so I don't go for a 2 to 1, I don't go for a 3 to 1, but what I do is once price goes up and it creates a new high, so going along here, we've got a new high, fantastic. I wait for this next counter trend, and then a break of this high. I know it sounds a little bit crazy, but a break of this high, which is about here, and then I move my take profit, TP / stop loss, behind that move there. Because as price moves on, and let's say it does it again, I then move my take profit and stop loss up to here. And then as it goes on further, up to here. And then when price comes back down, let's go like that, and price comes down and takes me out, well, that's fine. It may take out my take profit and stop loss there, but as soon as we get this nice break, guess what we're doing? We're riding the market down. We're starting to go down with the market, so we can get involved, and then when we get a nice pullback, I can move my stop loss there, another pullback, move my stop loss there, another pullback, move my stop loss there, and I'm basically getting involved at the very start of the trend. So this is effectively the height. Wow, this is looking a mess. I'm getting involved up here, and I'm riding it all the way down to the bottom here. So I'm taking in all of this profit, and it's only when the trend reverses, when I get taken out of the market, and I get back in the market in the other direction. It's as simple as that. So what we'll do next is we'll jump over to the live charts, and we'll go through what it looks like using real candlesticks, because it is very different from what we've just seen here. It's not as clean as that, but there's a few hints and tips of what I'll show you using pure price action. Now there's other things that you can use like indicators and things like that, but we're just going to show you the price action at the moment, and we're going to go from there. So now we've got the presentation part out of the way, let's look at some actual charts of how identifying a trend actually translates to what it really looks like. So it's really easy to look at a very basic diagram like what we've drawn before, which is like this to identify a trend moving downwards, or like this to identify a trend moving upwards, because what you're looking at right now for a lot of you just looks like a load of mess. But don't worry, I'm going to help you identify the trends on this chart. Now before we get stuck in with this, you might notice that we're using the 1 hour time frame. Now don't worry, it doesn't matter what time frame you're using at all, because even if we're using the monthly time frame to identify a major trend, we're going to have mini trends throughout that. So within the monthly trend, we're going to have maybe 4 or 5 trends on the weekly, and then 4 or 5 trends on the daily, and so on and so forth. It really doesn't matter what time frame you're using, or what currency pair or stock or whatever it is that you trade. It really just matters how you identify them. Now, something which I didn't mention before is that the wicks count when it comes to identifying a trend, because it still displays where price was at one point. Okay, so even though price isn't there anymore and it's no longer part of the body, it still indicates where the price was. It also doesn't matter necessarily where you started off identifying where this trend started. So let's just say, for example, what we're going to do is we're going to use the bar replay tool. So we're going to pretend that we're in a live market at the moment, like we know that price is moving upwards, but we're going to go back to here. Okay, we're going to start off and we're going to say that this red candle here is our starting point. So looking left on the chart, we can see that price has sort of slowly worked its way up to there, but it hasn't broken this high. So currently it looks a little bit like we're struggling to break above this level, and this is a low over here. But we're going to pretend that we're sat down at the charts at 8 AM in the morning on the 1st of February. Okay, so we're starting off at this point. As I mentioned before, you start off just with a starting point. You don't know if this is the high or the low, because after this candle, after this red candle, you actually don't know which direction it's going to go in. But we're going to use the candles as we can see them first, and then we're going to continue this trend using the bar by bar replay. Okay, so we're going to see it a little bit more from a live market perspective. So we've got a starting point, and then we get a low, we get the start of a counter trend, and it comes back, but it doesn't break this level here, so we've still just got a high and a low, and then we get a counter trend here. So we're going to mark these off individually, so we get our first sort of counter trend, but we don't get a break, and then we get a further counter trend, and then another one, and then another one, and then we get moved down, but it doesn't break. Then we get another one and another one. So we've had, in this sort of counter trend, we've actually had five new places where prices try to pull back to, and then we get our break, which is here, and then we get a new low here. So we've got our high, we got a low, we've got a lower high, we've got a lower low, now another lower low. Then what we get is a pullback again, and then we get a move down, then a move up, then a move down, then a move up, move down, up, down. So here is where we broke this low. So within this major sort of downtrend, we've actually got several little movements here, but don't get confused, okay? But what I'm going to do is I'm going to move this up. That was the combination of patterns for the highs and lows to be identified, rather than it being as clean as what we saw before, which is that. It actually ended up looking like this one. Okay, so it can look a little bit confusing, but don't let that confuse you, because here is a really good tip which I've learnt to do. And all I do is I get a horizontal line and I put that at my starting point. Okay, so this is the line which needs to be broken for the trend back here to be confirmed and continue moving upwards. And then as we've got a move down and then counter trends, what I do is I put this line on the low. So it's only when either of these two lines are broken by price that I can confirm that a trend is forming. So as we can see here, skipping out all the other little iterations, we've got the high, we've got the low, we've got the lower high, and then once we've got the break of this move here, what we can do is we can move this line down to confirm this is now the low to break, and this is now the high to break. It's no longer this one's no longer relevant. It's now this one and this one. So price now has continued down, then it counter trends, comes back a bit, but then it creates a new low down here. Okay, so what do we do? As soon as this breaks, let's move this out of the way. As soon as this breaks to here, we can move our low a little bit, then we can move it a little bit further, then a little bit further, then a bit further, and as price carries on breaking, we can just carry on moving this low down, because this is the level to break. Now, the move which took us to this low is still up here. It's still this one. It's not a combination of all of these, it's this move here. This is the main move which took us down, because this was the deepest part of the previous section, okay? So this line moves here, and the only time when we can consider that we're actually reversing in a trend is when we've had a break, a sustained break above this line, which is what happens here, clearly. So we've got this new low down here, and then we get a high which just breaks it, completely breaks it. We don't have a break outside of it, so price came out and then popped back in. I always like to see price physically break and stay out of that area. But if I go down to a lower time frame, this will look probably like a full blue candle or a couple of blue candles clearly breaking this line. So this is the new high. Then what we get is a counter move. So that's creating a higher low. Then once we've got a break of this move, what we're going to do is we're going to confirm our higher high. Now, as soon as this one gets broken, I did that a little bit late, but this line should have been moved to here, okay? So that is now confirming, because we've got this high broken, and we've got our 1, 2, 3, 4, or as some people will call it, the A, B, C, D. in reality we've got our fourth move, it's broken above here, which means that we're now in the upward trend. So we've broken the downtrend and we're now moving up. So we can start to look to get involved in the market with anything which looks as though it's likely going to be a counter trend candle. So this blue candle here, to zoom in a little bit better, is what I would class almost a perfect pin bar. It's grabbed a bit of liquidity from this red candle, which we'll be getting into, and it just looks like a perfect entry opportunity. And yes, we've got hindsight, and we know what the result is going to be. But what we could do is we could place our order, we can set it as a, I don't know, 4.5 to 1, and we can just see if price is going to get to it. I've got different take profit criteria than what a lot of other people have. I let my winners run the best that they can before a counter trend and it comes back against me. But let's say, for example, we put in our orders there, it would be the ideal place to get involved because we have broken this high. Now, as price continues along, what we're going to do is we're actually just going to use the bar by bar replay, making ourselves new highs and then higher lows and then high highs, high lows, higher highs, and then we're going to look at hopefully another reversal move to take us into a downtrend so we can see it happen live on the market, because I can't really remember what happens beyond up here. I think it might start reversing, but we're going to find out. Okay, so let's identify first of all where our most recent high is. It's actually somewhere up here. I think it's the tip of that red candle. And where's our most recent low below that? I would say it's this blue candle here at the base. So let's move our lows. Okay, so that's looking good. Now I was going to say, if that was to break through there, it would look like we're now in a reversal, so we're looking at a downtrend, but still, even though we've got a counter trend move, we could look at getting involved in the market here with a buy order. It doesn't look so much to me like a reversal setup which I would trade. Maybe you guys might look at this and go, yeah, that's a good time to get involved, but for me, not personally. But let's carry on going. There we go. So we've now got a new break, so that becomes our higher high. And this becomes our higher low. Let's see where we can go. And we've got a couple of breaks here, which is superb. Do we have a counter trend? Kind of this red one. I would class this as it in my style of trading. So we've got a couple of breaks here. Would class this red one as a bit of a counter trend because it is moving backwards. Now price is starting to get a little bit choppy. Let's see what it does. Carries on moving up, and all what we're doing is we're literally just riding this trend up. So when we started and we thought that we could get involved in the market down here, could you imagine if you held the trade? If we held that trade, we'd now be up. You know, if you put your stop loss in a reasonable place, like a couple of pips just behind the base of this blue one, you know, we'd be running at almost 7 times our return already, which is superb. There we go, we just carry on going, we're literally just riding that trend up. Now I want it pretty soon to reverse so I can show you how to identify a reverse. So as soon as this level breaks and then we get pretty much a bounce off of here and a rejection and a move down, then that will confirm the move down. Okay, so what we have had is a break of that low, so price is starting to move down. Looking back, that stays in place because we haven't broken it yet. Yes, we've broken the move down. We would technically be out of this trade now, but we would have gained what, 7 times our return, which is super because we got in the trend right at the very start where it was safe to do so. So as soon as we've got a break of this area, which is the move which took us up to the most recent high, we can start looking at getting into a reverse. So we want a break out of here, a move back up, so what would be classed then as a counter trend, so going back up would be the counter trend, and then a break of that level again. Okay, so at the moment what we have is our start, we've got our high, And then what we want to see is a break of this, and then a move like that. So a break of that next area. Then we can look to get involved. And we get it very, very slightly. So in my eyes, at the moment, until we get a break of this, we're now in a downward move. Perfect. So this is a prime example of a reversal situation. Okay, so the move which finally took us up to here has been broken, and then it tried to break this high area again, but it didn't, and it broke even further. Okay, so we've not created a new high, we've actually got a lower high, and we've also got a lower low. Now if you remember what a downward move looks like, it looks like that, and if we move it over here, it's pretty much that. So we can now start looking for, effectively, we can move this as well, we can now effectively start looking for bearish signals to start getting involved in the market moving south. That would pretty much be an entry signal. Let's pretend that it is. Let's see how it goes. We can't win them all, so let's see how it goes. So just covering myself with a quick disclaimer. Not looking too bad. Ooh, sorry, I just did that a little bit too quick. And there we go. We'd have probably lost a tiny bit on that trade. But that's effectively how to figure out whether or not the trend has reversed, and that's also how to follow the trend. Now you can't win all of them, and this does look like a strong bullish move. And let's see now if it starts moving back up. Yes, it's broken this move to move us to the low. So effectively, we had our moves down, then a bit of a counter trend. Now it's zigzagging, which normally means that it's in a channel. We'll cover that in another video. Then we got a nice clean break, and it hasn't looked at slowing down. Now in my eyes, because this is still the major high, and it's old news, it doesn't matter so much, but if that gets broken, it's takeoff time. But yeah, let's see what happens. It does break it, and it does take off. And I'll tell you what, just before we jump off, something which might help some of you just save a little bit of brain power is that you can use an indicator to help you with general trend changes and trend direction. Now I do use indicators from time to time, not always, but I do use them, and I won't lie about that. If it can help preserve brain energy, you're going to be performing better in the market, but just make sure that you're using the correct type of indicator. Now to use the indicators, the ones which I'm talking about are the moving average and the exponential moving average. And I'm going to just show you these quickly. Alright, so go to indicators at the top of TradingView, and let's just type in there moving average, and you've got the moving average, the exponential, and the weighted, etc. But let's just go with the general moving average, which means that it's just literally a standard moving average. And we'll go over to here and we'll look at our settings. And let's change the input to maybe 50. Something like the 50 or the 200. Basically the 50 just looks at the average of the last 50 charts. So I'll tell you what, let's switch to the 1 minute so I can really demonstrate this. Get rid of that. So the time is currently 5:27 in the morning. I've just finished my Asian trading session, which is, how I can do this. Let's go back 50 minutes from here, which should make it 4:37. So 4:37 and 50 bars. So this line here, this white line here, is indicating the moving average from all of the candles within there. Okay, so that's just showing you the general trend direction within that time frame, and then from here it's effectively just the candles within there. Okay, so if price is above the line, that's indicating that you're in an upward trend. If price is below the line, you're in a downward trend. It's generally quite simple. And different settings on this as well. It depends how much of a longer time frame that you want to go by. Like you can use the 200, you can use the 50, you can use the 20. Now, as you can see with this, with the 200, nice and clean, price comes down, bounces off it again, it's just bounced off it again. It looks like we're in a sustained upwards trajectory. We're in an upward direction. Let's go back a little bit further. Along here, perfect. You know, it's quite clear using price action only that we're in a downward trend. But if you want to see where it indicates that price might be coming to a close, it's when price starts going back into the moving average. So that's a really, really simple way where you can identify where the trend is if you're not sure. Because without the moving average on here, this part looks as though it's starting to reverse, which is great, because we can see that, you know, we've got a break of this area which brought us to the low, like what we just looked at. And then we've got a new, we've got like a higher low, we've got a break of this. It looks like we're now moving upwards, but the moving average should keep you generally on track, and off you go, and you can start trading. But that's just a really simple way to do it. And then you've got the exponential moving average, which is really similar to the standard moving average, but it just puts a little bit more pressure on the most recent of those 200. So the most recent price action is a little bit more important on the curve of this trend line. So we've got the EMA 200 there, we've got the simple moving average here, which is the thicker of the two white lines. Play about with both of them. You know, some people use trend line strategies. I don't. I think they're a load of rubbish, to be honest, but it's actually quite useful sometimes if you just want to save your brain energy for entries and exits and stuff like that, just to identify the general trend. Now guys, if you found any value in this video, give it a thumbs up. You know, hit that like button as hard as you can, and subscribe to the channel, because the next video is going to be based on order blocks, and you will not want to miss that because it makes me money hand over fist. So thank you very much, catch you soon.